MTFE, or Metaverse Foreign Exchange Group Incorporated, was a Ponzi scheme operated in several countries. The company claimed to offer high returns on investments in cryptocurrency, forex, commodities, and stocks. However, it was a scam that defrauded investors of millions of dollars. Founded in 2022, MTFE quickly gained popularity due to its aggressive marketing and promises of high returns. The company proclaimed the use of a proprietary artificial intelligence cryptocurrency trading algorithm to generate profits for its investors. First, let's learn the term Ponzi scheme. A Ponzi scheme is a type of investment scam that leads investors to believe that profits are coming from legitimate business activities, when, in fact, they are coming from the contributions of new investors. Named after Charles Ponzi, who perpetrated such a scheme in the early 20th century, the basic idea is to promise high returns with little or no risk to investors. The scheme leads investors to believe that profits are generated through the success of the underlying business or investment, but in reality, returns are paid to earlier investors using the capital of newer investors. As long as the scheme continues to attract new investors, it can appear to be profitable. However, the moment it becomes difficult to recruit new investors, or when existing investors try to cash out their returns, the scheme collapses as there is no legitimate source of profit. Let's get back to MTFE and how it worked. MTFE claimed to be a Canadian company, registered in Canada, and regulated by FINTRAC. FINTRAC stands for the Financial Transactions and Reports Analysis Centre of Canada, a financial intelligence unit that monitors financial transactions to prevent illegal activities. Its main role is to combat money laundering, terrorist financing, and other financial crimes in Canada. MTFE published an app for Android and Apple devices. The entire trading operation was conducted through this mobile app. The most interesting thing was that this app was blocked from being downloaded in Canada. To invest in this trading platform, it is a must to have a referral. You need a code from the introducer, and this code is unique for every user. When you successfully register with that code, you can introduce the platform to another friend and provide them with your reference code. By doing so, you gain extra profit, similar to a commission, but not one time. Now that you have successfully registered on the platform, the next step is to deposit money into it to start trading. By creating an account on this platform, you receive a digital wallet that can hold digital currencies. A cryptocurrency wallet functions similarly to your leather wallet, holding digital currencies like Bitcoin. With the wallet, you receive a unique address, comparable to your home address. Just as you use your residential address to send a package home, you use the address provided by your crypto wallet to send or deposit money. This wallet address is generated with random characters and numbers, remaining unique to its owner. When the app provides you with your address, you must send funds to that address through a service like Binance. Binance is a cryptocurrency exchange allowing users to buy, sell, trade, and store digital assets. Now that you have funds in your digital wallet, there are two methods to trade: by yourself or through an artificial intelligence program claiming to be trained on market data and its variations. If you possess the necessary skills, you can take the risk and handle the trading yourself, or you can leave it to the AI program, which offers less risk and potentially more profit. Things went well for a few months, and popularity soared. Individuals with no trading experience joined the platform and began trading using the AI algorithm. More and more people joined the platform, introducing others and pushing the app on the Google Play Store to reach the 1 million downloads milestone. Millions of dollars flooded into the platform through cryptocurrencies, and people began earning profits. As more individuals joined the platform, they started earning even greater profits. It's important to note again that to join the platform, having a referral is a requirement. Let's learn some technical details. When a user activates the AI trading algorithm or does some trade, the app sends a request through the mtfe.net web address, notifying the backend about user interaction. The numbers on the app interface changed based on the scammer's system, and no real trading occurred in the process. The wallet addresses for users were not actually under user control, but rather under the control of scammers. The numbers updated in the app interface were merely representations of the user's wallet balance. Behind the screen, no actual funds existed. The scammers transferred funds from these wallets to another small group of wallets, and from those wallets, they transferred funds to their main group of wallets, leaving small amounts of money sufficient for weekly transactions. The scammers were adept, and users were unable to notice this because they had no understanding of what they were doing or what trading involved. The app's chart and trading algorithm were fake props used to showcase the scammer's legitimacy. Here, you can see hundreds of thousands of funds transferred through these wallets. On February 23, 2023, Brokers Views reviewed MTFE and issued the following warning to investors. Most of the people in upper positions on the referral ladder started to withdraw their funds with profits they earned through the system. On June 30, 2023, the Ontario Securities Commission, OSC, issued a warning against MTFE, stating that this broker is not registered in Ontario to engage in the business of trading in securities. Subsequently, they lost their mtfe.ca web address, which they used to showcase their legitimacy by stating that the business is registered in Canada. They have established their old website as mtfe.io, but more users in higher positions on the referral ladder began withdrawing their funds from the platform. In the days following, most users requested their funds back, but there were not enough funds to pay profits and returns to all because there was no actual business behind the system. As explained earlier in the Ponzi scheme explanation, what they had done was share new investments with individuals in higher positions on the ladder. Suddenly, they ceased transferring any funds with users and began withdrawing all available funds in other wallets into their main wallets. In August 2023, MTFE's app and website went offline, leaving millions of investors unable to access their funds. Users' app interfaces are updated with minus numbers, and the company's founders disappeared with investors' money. We received a wallet address from a victim, and using that address, we began tracking down all the transactions that occurred in the last days of the scam. Our main goal was to identify the wallets currently holding people's money. This is how we did it. Firstly, we traced transactions from the victim's wallet and identified a receiver's wallet. We retrieved 247 transactions from the newly discovered receiver wallet and began tracking other wallets. From these 247 transactions, approximately 67 million USDT was transferred. USDT is a digital coin with a value nearly equivalent to the USD. For easier understanding, we will use USD for future explanations. On August 8th, in a single day, they transferred 15.6 million USD using the newfound wallet. Transaction patterns and dates perfectly aligned with the last days of the scam. So, we knew we were on the correct path. Summarizing all 247 transactions, we found that all the funds were delivered to another group of wallets. There were 48 receiver wallets. Out of these, 32 of the 48 wallets were created on August 8th. The scammers' main idea was to spread all the money they scammed as much as they could and make it untraceable. Among those 48 wallets, we found 3.4 million USD on September 29th, 2023. We assumed that all newly created wallets would lead us to a big account, but we were half wrong. There were another 41 wallets on the road. Out of these, 27 of the 41 wallets were created on the 18th and 19th of August. However, all the newly created wallets were empty, which means the funds were transferred into another group of wallets. Further analysis of all the addresses led us to 2 wallets, with a combined sum of around 4 million and a Binance wallet address with a huge amount of money. The app is still available on app stores. People have started rating the app with negative comments. However, the harm has been done, and there is no way to turn the tables. Remember, if an investment opportunity feels rushed or relies on bringing in new participants to sustain returns, it might be a red flag. Let the MTFE case serve as a cautionary tale, prompting us all to be alert in protecting ourselves and our investments.